Hello, in this lecture we're going to record a transaction related to the revenue or accounts receivable cycle. We're going to record the journal entry up here on the left hand side and post that journal entry to the trial balance to see the impact on the accounts on the right hand side. Accounts including assets in green, liabilities in orange, equity in the light blue, and the income statement part of equity, revenue and expenses in the darker blue. Transaction: perform work on account for cash 10,000. So we did work. We billed the customer, have not yet received the cash. In real life, we would know that we did work and we billed the customer. On a book problem, it would tell us that, it would indicate that by saying something like, we did work on account. We did work, we didn't receive cash. We hope to receive cash sometime in the future. So if you see something that in the format of on account, that generally means account receivable in terms of text. Therefore, first question, is cash affected? In this case, no, it's not. We got an IOU instead. Now the IOU is still an asset, it's accounts receivable, it's up here in the asset section. We know that assets have debit balances, and we know people owe us more money, and therefore that asset needs to go up. How do we make something go up? We do the same thing to it as what it is. Assets have debit balances, therefore we're going to debit the accounts receivable in this case. That means we're going to have to credit something. What will the credit be going to? Why will people be paying us, in this case customers be paying us $10,000 in the future? Because we earned it. We earned it by doing work. Whatever it is we do, we did it, and therefore earned the revenue at this point in time, even though we have not yet received the cash. And therefore, we will credit the revenue account. Now, the revenue account is always going to go up in the credit direction. Revenue is a credit balance account. It only goes up for the most part. Therefore, it's pretty much always going to be credited for the most part. If we post this out, then we're going to say that the accounts receivable is going up from 0 by a debit of 10,000 to a debit of 10,000. And the revenue account is going up from 0 by a credit of 10,000 to a credit of 10,000. Accounting equation: what happens to assets? Assets went up because the cash is an asset and it went up. Liabilities: nothing happened because nothing happened to these orange accounts here. And the equity actually went up. This can be the most confusing part in the equity section because all these blue accounts are the equity section, and note that the equity section has a credit balance. So when we're looking at the trial balance, the fact that the revenue went up, the credits went up, means that the entire blue area went up. The credits in total in terms of the equity section are going up as a whole. If we look at net income, part of the equity section, we can see that it went up. It went from 0 up in the credit direction by 10,000 to 10,000. Revenue credit minus the debit expenses means that we went up to 10,000 in revenue and net income in this case.